Today, Cameron Winklevoss accuses Barry Silbert of bad faith negotiating tactics. Sam Bankman-Fried enters a plea in New York federal court over fraud charges. And with trust in crypto exchanges plummeting, Crypto World explores the growing interest in cold storage. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices relatively flat to start the new year. By noon Eastern, Bitcoin traded around $16,800 and Ether dipped to $1,200. Solana, meanwhile, surging this morning, up 16% to $13. We look back at 2022, it was a rough year for the cryptocurrency market. Bitcoin dropped 65% in those 12 months and Ether fell by 67%. At the same time, the S&P 500 took a 19% hit in 2022. All right, let's talk about the top stories. First, one of the Winklevoss brothers is accusing crypto mogul Barry Silbert of, quote, bad faith stalling tactics over Gemini's frozen crypto funds. Gemini president Cameron Winklevoss made the accusation in an open letter, but said he was open to resolving his firm's complex lending dispute with Silbert's company, Digital Currency Group. Gemini had a partnership with Genesis Global Capital, which is the lending arm of Genesis Global Trading, which itself is owned by DCG. Gemini offered customers high yields on their crypto deposits by loaning them to Genesis Global Capital. Well, when FTX collapsed, Genesis halted redemptions and Gemini followed suit. Now, Gemini is trying to recoup $900 million in customer funds that were loaned to Genesis as part of that partnership. Next, the pace of stolen crypto funds plummeted at the end of 2022. Certic, a blockchain security analytics platform, found just $62 million worth of crypto stolen in December. That's down from more than $500 million in hacks that Certic analyzed in November. Certic also looked at crypto-related probes in 2022 and found 96 publicly announced investigations. Nearly half came from the FBI, 20% came from Secret Service, and 12% from the SEC. And finally, as we look ahead to the new year, some of crypto's biggest names are calling for some wild swings in the market. Bitcoin bull Tim Draper says his prediction of $250,000 Bitcoin by the end of 2022 is now for mid-2023. That's a 1,400% increase from today's prices. Then there's investor Mark Mobius, who says Bitcoin could fall to $10,000 this year thanks to higher interest rates hitting investor confidence. There's a lot of uncertainty hanging over the crypto market. For more 2023 Bitcoin calls, head over to cnbc.com/cryptoworld. All right, on to our main story. Trust in crypto exchanges has plummeted following the collapse of FTX, with Bitcoin flow off exchanges happening at unprecedented speed. Crypto World's Talia Kaplan explores the data and the increased interest in cold storage.
There's extreme fear in the markets right now.
Dan Ashmore, a crypto analyst at CoinJournal, looked on-chain and found that Bitcoin flow out of exchanges soared following FTX's implosion.
FTX was tier one. It was like as sacred as you could get in the crypto space. You know, the CEO, Sam Bankman-Fried, was on Forbes magazine covers. He was testifying before Congress. It really was the shock of all shocks. So there's just mass contagion and panic has flooded through the market.
Ashmore found that balances on exchanges dropped by nearly 200,000 Bitcoins compared to before the fall of FTX, as customers lost confidence in exchanges. That number trumps the Celsius insolvency over the summer, where 128,000 Bitcoins were pulled from exchanges in the month following the crypto lending company's bankruptcy.
There's been three, big crashes this year. We had the first, which was the Luna meltdown, which was the death spiral of a stablecoin back in May. And we saw on chain big patterns of funds flowing out of exchanges then. But that was DeFi. It was slightly different. It wasn't decentralized entities that were breaking the trust in the public. The first high profile one of them was Celsius in June, and we again saw the same pattern, but much more pronounced, of coins flowing out of exchanges into self-custody. But FTX was a whole different ballgame. Again, we saw the same pattern, but just on a whole new scale. There was 200,000 Bitcoins came out of exchanges within a month afterwards, as trust was just completely broken. So there's definitely a big movement towards cold storage or self-custody. It's just, there's too much uncertainty here and people just don't want to take the risk.
Not your keys, not your crypto.
Evan Singh Luthra is one of those people. He's an angel investor who says he lost $2 million on FTX.
The whole ethos of why we took Bitcoin and went away from banks was so that we could have control of our own money. Every Bitcoin I have in my hard wallet is still mine. Nobody could have taken it from me. Nobody can take it from me. But everything I put on any of these FTX, Binance, KuCoin, etc., I have a risk of losing it, right? And I'm willingly giving my crypto to somebody else hopefully try to make more out of it. But if you just hold it, it grows by itself anyways.
After what happened with FTX, I think a lot of people are going to the roots of Bitcoin and crypto. And that means really owning and managing your own assets without depending on anyone. One of the best ways to do that is, instead of holding your Bitcoin in an account on an exchange, holding it in your own account. It could be your own account that is a hot wallet that you own, meaning that it's connected to the internet, or it could also be cold wallets, right? Where it's not connected to the internet, meaning that you hold your Bitcoin there, you can't do anything with it, but neither can anyone else. And you decide when you want to plug it back in and use it.
What would you say are the advantages of holding crypto in hard wallets? And do you think crypto investors should hold their assets in cold wallets, hot wallets, or perhaps a combination?
It really depends on what you want to do with those assets. So the advantages of keeping your assets in a cold storage hardware wallet is that no one can touch it no matter what. It's there. Obviously, there are some other disadvantages. If you lose that piece of hardware, then you lost your assets. No way to go around it, right? So with more power over our own assets comes more responsibility. Another disadvantage of holding it in a hard wallet is that you can't immediately trade it. So for example, if you for some reason think you want to trade it for something else, it's at the moment not connected to the internet. So you need to get the actual piece of hardware, plug it into the computer and the internet, and only then can you operate with it. So as a counter view of that, a hot wallet that is connected to the internet, you can more easily and quickly start trading it. And if you hold it on an exchange, meaning that it's a hot wallet that is not self-custodied, it's custodied by an exchange, then you can just use it more easily. So the real question is, what do you want to do with it? If you just want to keep Bitcoin believing that the price will go up, so essentially kind of thinking of as Bitcoin as digital gold, why not keep it in a hard wallet in a very safe place and make sure you remember where that is? But that way, no one can touch it no matter what. If there was, God forbid, a hack somewhere, or unfortunately a bank run or anything like that, then you won't be affected because you're literally holding the digital asset in a hardware wallet.
All right, before we go, let's talk about Sam Bankman-Fried. The former CEO of FTX just pleaded not guilty to charges including wire fraud and conspiracy. SBF has spoken publicly numerous times about what went wrong at FTX and has maintained that he didn't commit fraud. At the same time, two other top executives, Caroline Ellison and Gary Wang, pleaded guilty to fraud charges. Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.